Dollar yen trading down into that more or less the levels we were looking for it to. It's taking its sweet time, but we'll let it. We're looking to be buyers down around 118.80 to 118.50. Really, 118.50 is the equal leg, so that's more or less my favored area to be a participant here. So again, 118.50 buyer for upside towards 123.50s. This is just equal legs down into, broken trendline resistance, now a support, full 50% pullbacks, and more or less where the continuation of the trend higher, should be from. And we're just simply pulling back into that area now. Today, starting talking about the yen, because this is actually an inflection zone that we are looking to trade into yesterday's recap. In yesterday's recap, rather, that has now traded, and we've gotten a reaction back towards our inflection zone. We've basically been filled down into the 1850 area. We were looking for 1880s and 1850 fills. We've gotten both. Our stops are below the 1800 handle still, right? And we're looking for upside now, just simply back towards these two inflection zones. And the inflection zone, so those that bought the 1840 or 1850 area, your first targets here at the 119.15s, they've been hit, right? And your stop was, of course, down here. So your first target has been hit. Okay. Now first targets for the original entry at this full 50, which are a little bit bigger, that's where we're more or less looking for it to go. Three waves back here, and the dollar yen traded into the equal legs, right? We know it got free. Well, more importantly, back on the 4-hour time frame, we step out. We also know there's that big 50 back, right? We're just looking at the pure technicals for the moment, the pure price measurement that is getting reactions, and we see the level, in a larger three-way structure that has occurred. If we start to break this down towards a micro time frame, and we start to look at, okay, well, what's the dollar yen doing off the lows? We know that these bigger levels exist, right? We can just remove them from our chart for the time being because we know that they're there. From a slightly larger time frame, let's go to look at a 15-minute chart. This is better. We know that this leg down had some kind of pattern or trend involved in it, and in this case, it was extensions that basically blew out of targets and had the ability to pull into a new extension. No new extension existed, which means the next in the series setup would obviously be same anchor, new lows, which in this case is very likely going to become some kind of full short, but we're not really looking for that. What we've seen now is basically a break, a release off of what is really long levels, and now the ability for the market to trade into three waves into halfway back long. That's just your 15-minute time frame. And this should take you up to, guess where? Step back out to the 4-hour time frame. What trade has not hit its first targets yet? The full 50% pullback that we've have from the 118.80s. So 118.80s is now again the micro entry. It may get a little dirty and sloppy. Sometimes they do, but this is a very valid pullback, so be aware of that. This is very valid three waves up. Very valid broken trendline resistance being broken and now tested as support. It's also a prior trendline support coming in as trendline support yet again.